What's up, everybody? Hope you're doing good. Hope you have a good Saturday, good weekend. Nice to see you around. Another day, another live stream. We keep the live streams up. Oh, man. Let me turn the music down a bit. Okay, so how are you doing, everyone? It is weekend. And because it is a weekend, the content is random because I do other stuff as well. In case you have not seen it before, it's on the banner here. Weekend random. Sunday, altcoin stream. So tomorrow is altcoin stream. So I'm going to plan it tonight or tomorrow morning in the agenda in YouTube so that you will see it in your timeline and that you are prepared when it's going to happen. Probably 2:30 Central European Time, PM. But yeah, so today it's great, not gonna lie. It is great to have a little bit of time, like instead of making content to, I read a part of my book today. Did some other stuff that I'll talk about. And yeah, I was feeling a live stream and checking the charts. So what's up, everyone? Good to have you here. Trons Pro, T. Clepson, what's up? I'll answer your stuff in Discord. I've only seen a notification. And I read the message, but not in detail. I would need to read it in detail. Crypto Paralysis, how you doing? Joshua, ZF, Koens for President. Cheers, man. Welcome. You got second indeed. Odin, welcome. Fozzy, Mr. Friends. Catch from the beginning. Such a legend, Mr. French. Mr. French, I said. Yo, Mr. Friends. Friends. You have a weekend now? Like no work going on in the weekends, Mr. Friends? Adam, what's up? How you doing? Oliver? Remember to hit the like button. Cheers, Odin. Is this real? Crackdown. When will be able to long? You will be able to long when your personal plan and strategy based on statistics with entry requirements tells you to long. As long as that's not the case, you do not have a long. Because of course you need a personal plan or strategy. This is not a signal channel. For the signal stuff, you probably have to go to the Moon Boys. On this channel, we teach people how to fish so that they can fish for themselves, you know? That's the goal. But I do have steps that you can take to become or at least have a great chance of being a professional, consistently profitable trader. In a nutshell, and then we start. In a nutshell, 1, try as many free tools as you can in TradingView. 2, build statistics on some of your favorite tools. 3, combine some of your favorite tools, right? And build statistics on the combination. 3, tweak and adjust, add a tool, remove a tool, build more statistics. 5, trade your strategy based on statistics with a low amount of money and work on your trading psychology. Step 6, increase your portfolio size. Slowly, so you get used to bigger losses. What's up, Graham, Henrik? Good to have you here. Perko, welcome. Could we cover Bitcoin? Yes, that's what we're gonna do. Read that book already. Yeah, I mean, what page am I? I'm currently page. 1 second here. Oh wait, I'm at a new chapter. So page 101. Not bad, not bad. I'm getting there. You know, tomorrow, maybe tonight or tomorrow, I'll read a bit more as well. So, yo, Saraga, how you doing, man? Is it only me that count waves instead of sheeps when I'm about to sleep? Yeah, this guy, Henrik. No, I guess not. Straight into the low time frame. I'll start on the 4 hour. The 15 minutes it's not yet too. We can have a look, but you know, it's weekend generally arranging structure. So I expect sideways price action, and probably by the end of the weekend we'll have a better idea. Of course, Hassan, Logic Mindset, welcome. A moment of silence in honor of the bulls. Yeah, I saw the message in the group. 1 minute silence, please. Free weekend, so coding. Oh, I like what I'm reading. Make sure if you need anything, Mr. French, write me a message, right? Bina, what's up? How many years did it take you to become a proficient? Proficient? I guess you mean profitable as well, like proficient and profitable, probably like in the same, like, it's probably the same word. But my first year in the industry was a slightly losing year. The only reason I didn't blow any accounts in my lifetime is because I always had risk management. I got to be honest, not in my first trade I've ever done. I risked literally all the money I had on leverage, didn't even know what I was doing. Made profit and then lost it all the profit and a little bit more. But I was losing in the first year. And then in the half year after, so 1.5 years, I started to get towards break even. And then 1.5 year, that's where I started to be profitable. That's also when I finished my first strategy based on data and statistics, which helped me in my profitability. And that's when things went very quick. So, once you prove it to yourself and you work on your psychology and you have a plan based on data and statistics, preferably, because data and statistics help in your mindset as well. I mean, that was a big change. Good evening, Tommy. Can you please do Bitcoin local? Yeah, we're going to have a look on the lower time frame as well. Competent. Yeah, I guess competent equals profitability. So, how was your weekend, guys? Do you have anything fun planned, or do you have like cool stuff that you've done today? So my day was, quite like nice, chill. In the morning, went to the gym, had a crazy workout. I did a group lesson at the gym for legs and core. Holy moly, I was so dead after that. And then we decided to go to the city center here in Nice because we were looking for a product to buy, but it's only it's not available everywhere. So we went to the city of Nice, but they didn't have it there. Then we had lunch there, and we went to Monaco. And unfortunately for me, they also didn't have it in Monaco, but they did have something for that my wife was looking for. So we got that, and now we're back. So we were in Monaco for pretty much the whole afternoon and start of the evening, and now we're back. So and then I felt like doing a live stream, and we'll have dinner later. So that's basically my day. That is what happened today. So a bit of shopping. We were looking for something specific. Actually, I was looking for something specific. But I didn't find it. But my wife found something that was on her vision board. Yeah. So we just got that. So we have a couple of scenarios on the chart, and we're going to cover these scenarios and then move into the 15-minute time frame. That's what we're going to do. Hi all, buddy. What's up, Octave? It really helps me think. Cheers, Hendrik. And make sure to have patience. Elliott waves is a long-term thing, especially learning it. Harry, sorry to hear that, mate, but make sure to learn from it, right? It will always hurt, but what's the lesson, right? No stop loss, no plan, no invalidation, too high risk, no risk management, no calculation, all of it. So, yeah. What's up, Matt? How you doing, man? Beautiful day out, perfect weather. Not too hot, right? But now that's good. I'm happy to hear that. Yeah, same here. Weather is nice. It was 28 degrees, but the mornings and the evenings start to cool down a bit more now in September. So it is not. It's a nice temperature. It's nice to walk around and see some stuff. So let's start the analysis. I won't be online for too long, but we're going to chill a bit, so it's going to be short. Okay, let's see, 14 minutes in. I don't know what Cardano is doing, but it's awesome. I haven't seen the chart. What if you have both bullish and bearish CVD on the low time frame? If you're new to CVD, it's best to wait for clarity, so that because your eyes need time to see the patterns, right? So for example, when we had bullish CVDs here, I said these are not interesting. As price moved up, these are interesting. But if you then move down, you want to wait for price to stabilize and move back up, right? So of course it takes experience, like any indicator, any tool. It takes experience to use it. And on the lower time frame, yeah, we have a bullish CVD, we have a bearish CVD at the moment as well. Locally, I actually want to, in that case, I would like to first actually pull a fib to see how far price retraced. So if we take a fib from the low to the high, then we can see that price did not yet retrace to the 382. So probabilities locally are higher to still, you still want preferably price to move inside the fibs, right? So, and if this here becomes a low and price moves up, you just take the fib from here to here and you still expect a retracement into wherever the fibs are at that moment in time. So the bearish CVDs is definitely interesting, also in confluence with the fact we didn't actually hit the fibs yet. So cool. Okay, let's start. It's going to be short, right? It's going to be short, so remove this. This is a volume profile of the current range, which I think is interesting. I want to keep an eye on, taken from the beginning of the range to where price is now. Most bearish scenario, continuation to the downside. We have a triple 1-2 here, 1-2, 1-2, 1-2, right? And we then look for impulsive continuation to the downside. Your invalidation is 57K, right? So you really, and I said that, I think I still have it in the probabilities. Once, oh yeah, here. For probabilities to switch to some more upside, price really needs to move above 57K because that is the invalidation here, right? So preferably you want to take out this high, and that would be not bullish as in like, oh, all-time high next, but you can at least expect a bigger retracement with the potential of taking 65. But that's at the moment, we didn't take 57, so we can't really talk about that stuff. So in this scenario, the highest amount of volume is in the latest move to the downside here on the 4-hour time frame, right? Price moving down, volume increasing as price is moving down. And in this case, because we then have a triple 1-2 currently on the chart, you also look for a triple 4-5, meaning 3-4-5-4-5-4-5. Now, preferably in a impulse, your wave 3 is the longest, strongest, and most impulsive wave. Now you can see that this wave 3, quite interestingly, is actually not too big. Let me pull a few fibs here. Which one am I going to take? Let's do that. So take the 1.618. Yeah, we didn't even hit the yellow 1.618 here. Let's take the orange one, see how far we got. Also didn't hit the orange one, and I'm pretty sure we didn't hit the red 1.618. And the reason the 1.618 is interesting is because the 1.618 is like a minimum target for wave 3. So of course the yellow wave 3 didn't hit the 1.618, taken from the start to the end of yellow 1 to the end of yellow 2. That's not like a problem per se, but you do like the red wave 3 to really hit the 1.618, like especially after a multi 1-2. But also after a multi 1-2, you do like to see impulsivity. So higher amount of volume, okay, step 1, right? But then you're going to be looking for 4-5s, of course. And the invalidation for a wave 4 is the 0.618, which is positioned at 55.3K, right? 55.289. So 55.3K. If price hits 55.3K, this move up, right, is not going to be counted a wave 4 anymore, which then leaves us with two scenarios I have here, right, and the potential of then another 1-2. But that is when you start, like, that's a quadruple 1-2. That's when things start to be a little bit like too much, right? Like, oh, a quadruple 1-2. So of course, if you do hit the 618, then your most bearish scenario is going to be another 1-2. But then again, this is your invalidation. So the 618 I put on my chart earlier, this one, this is what we call a soft invalidation in this scenario, right? It invalidates a wave 4, but it doesn't invalidate the scenario. You need to take 57K. You need to take 57K. All right, that's the invalidation. Now, a scenario, this is actually nice. A scenario that is invalidated, provides clarity, is the diagonal. Price move down, hit the 1-to-1 here. The reason it's invalidated, right, for the people that don't know, this red 1-to-1 is a trend-based fib extension taken from the start to the end of 3 to the end of 4. Wave 5 is now longer than wave 3 because it hit and passed the 1-to-1, wicked into it, and that is not allowed in a contracting diagonal, right? So we can remove this scenario from our chart, which is nice, right? And then we have the other two that I was talking about, right? So these are your two other scenarios besides the most bearish scenario. However, what you will see is in these two scenarios, you preferably still look for another move down, ideally. Again, in most of the cases, let me double check here. Yeah, here invalidation is 57 and invalidation here 55.7. So wait, actually, is that correct? No, that was with the old. Poop. That was with an old low. There we go. So in the WXY here, right? So what we look for here is then a 3-wave in W, X, and then a wave Y. Now, what lowers the probabilities, and I mentioned this yesterday for this scenario though, is that your wave C in W is very shallow, right? Didn't hit the 0.618. It's generally something you like to see. And that's not ideal, right? The 0.618 is already a rare target, and we didn't even hit the 618. So, of course, this scenario doesn't have the highest probabilities. So we have our W, X, and then A, B, C, Y, 1, 2, 3, 4, 5, invalidation, 55.3K. So that 55.3K is important, right? Now, what is, by the way, also interesting is that this level is right below a resistance area that we have. So if we hit the resistance, we also immediately invalidate the scenario. So that's interesting. Right? It's good to know. And then we finally have this scenario here. A, B, 1, 2, and then 1, 2, 3, 4, 5, 4, 5. Now also here, again, right, 55.3K is an invalidation for an impulse inside wave 3. So I don't want to make it too complex, but a 5, 3, 1, 2, 3, 4, 5. But inside 3, we then look for internally 1, 2, 3, 4, 5. Finish 3, get another 4 and another 5. No? Common target for your wave C, by the way, is over here, which we have already hit. The problem for this scenario is that you already hit the most common target area for wave C, but you're not even close to finishing the impulse, right? So you already hit the 1-to-1, but you still need a 4, another 5, another 4, and another 5 to finish C. So chances are, of course, you're going to then move below the common target area, and we do not have that space, right? We don't have the space. You're going to be taking that low, and taking 49K increases probabilities for 45. 42 is also interesting. So at the moment, by all means, as price is moving to the downside, the highest probability scenario, quite simply, is going to be an impulse to the downside here, with then alternatives being a corrective structure in a WXY or an ABC. These are currently the only two structures that would fit as a corrective structure to the downside here, right? Let me have a short look and a short think here. Just checking something. Okay, I do have an alternative. One second here, one second. This is a little bit of live stuff, you know. We would need to finish it somewhere here, though. But that would be a very short Y. Yeah, it didn't even hit the 0.618. So that's not great. So what I'm looking for is there a way to count this as the end of a correction, right? So that you have impulse, correction, right? So that is your 1, 2, and then 3, 4, 5. And the reason this matters is because then your wave 4 invalidation would be higher, because you could take it from the high of W as well, which is the highest point in the corrective structure, and then it would be 56.2K, right? Instead of 55.3K. So that's of course quite a difference. So by all means, to make things very simply, right, from an Elliott wave point of view, you got to take 57K. You know, like I can summarize everything I just said with take 57K, and the probabilities increase to see a bigger, at least corrective, with the potential of impulsive move to the upside. But of course, it doesn't look too awesome yet for the bulls. On the daily time frame, we have a couple of scenarios that we have in mind. I explained at the beginning, already last week. Last week already we were talking about bullish structures here, right? Or actually, this. But if this is a very important low, if this is the end of a corrective structure on the daily, right, since the all-time high in March to where we are now, if this was the end of the correction, you want one of three structures: impulse, diagonal, double, 1, 2. 1, 2, 1, 2, invalidated, took the low. This being a 1, 2, you would need a flat A, B, C, but that's very unlikely because of time. This wave 2 is like, I don't know now, 12 times longer. Like this is 12 times longer than this, right? This move up compared to this whole range. So it's very unlikely you're counting a 1, 2 here, which then leaves you with a diagonal. But for a diagonal, you then have a 1, you need a 2, 3, 4, and a 5. So it's way too early. It's too early to talk about this. Right? Like you would really minimum need to take, again, 57K. But preferably you wait for your wave 4. So even if you do get a move up here, right, the diagonal, we will probably slowly start talking about it, but the probabilities are also still there for a WXY, right, and continuation down, which is very interesting, because if you can create another lower high here, right, fake out, like pretty much, right, fake out for the bulls. Again, they're buying. Again, people talk about all-time high and 100K and 200 and 500, but then instead we go back down, take 49K, go to the mid-low 40s, wreck everyone, and then eventually go back up. Interesting, no? But it's too early to talk about it, so it just doesn't have the highest probabilities. And then another bullish, quote-unquote, scenario, which is also still quite early, would be what I have on my chart here, right? So that is, you have A, B, C, and then you still need a D and an E, right? So a bigger triangle in a wave Y, by the way. So the whole scenario would then be WX triangle in Y. But also here it's early. Preferably you wait for wave D, right, to be in. It's good to be aware of it, and that's why I like to show it. But we need to see local strength first, right? So take 57K, step 1, because you invalidate some bearish scenarios at least. Doesn't mean, by the way, right, we can't go down. But there's going to be other scenarios, right? So 57K, well, if we take it, this scenario is invalidated, right? Would be good, no? Because this is the most bearish scenario. This one, as I have it on my chart here, would also be invalidated. And this one also pretty much. So that would at least be good for the bulls to look for a potential three-wave move up for either a D, or we look for a bigger WXY or some sort. But by all means, it's difficult to give the highest probabilities to the bulls at the moment, because everything is three-wave structures. As long as you don't take 57K, probabilities are simply bearish. Simple as that. So we are now at support. Just for your information, of course, we are at support here, 52.3, 53K. Resistance right above us, 55.3, 55.7. Yeah, we have a reaction, very, very nice. That's also what we like to see. Now, what we like to see for the bulls, right? So what would increase the probabilities for upside? Let me say this as well, right? You can, of course, wait for 57K and then look if your plan would match with upside. But what would be nice to see is price ranging here. I gotta be honest, it would be nice to hit resistance, not gonna lie, but at least range here, I don't know, maybe wick the low early next week. But if you then move up like that, and you create a little bit of market structure with consistent bullish CVDs, and especially if you can then also pass the resistance, probabilities would then increase to move to the next area of resistance, right? And that would then be again 60K. Let me check what I have in between. Yeah, I only have 2 dailies in between, but they're very separated from other confluences. So I have them on my chart, but I have the box at 60. So that's something I keep an eye on. So at the moment, we of course are as expected. Honestly, like I said yesterday, weekend is coming up. We have support just below us. I expect a sideways range because in the weekend, most commonly we go sideways. I mean, it's no surprise. That's simply probabilities. Weekend is generally sideways price action. And I still expect sideways price action. So, of course, we have a bit of a move up, right? Arguably, you're going to be like, hey, that's not sideways. But in the end, I pretty much expect a range here. And then next week, we might see some fireworks again. Right? Do we have anything interesting? 11th, some stuff coming in. 12th, 13th. So yeah, we have a little bit of news-related stuff. 50-minute time frame. Some people requested. I did not analyze the chart at all today. So what are we looking at here? Of course, we have the potential of a 1, 2, 3, 4, 5. If you can't count a 5 waver in here, then the probabilities are higher. This whole thing is corrective. So let's have a look. I want to go actually to the 5 even. I generally don't. So I like to wait for ranges. I'm a very patient trader. It's still a very young range, to be honest. But is this a... Yeah, so this second leg up is longer. And then if I do this, the third leg up is also longer. Oh, wait. I'm thinking about I want to see a diagonal, by the way. The reason is overlap here, right? So if we are bullish, again, I'll get to that in a second. Let me let me do my thing quickly here. A little bit of live analysis. There we go. From the low to the high to the low. That's longer. Low. Oh. Oh, we wicked it here as well, so this has to be your high. It is longer. Yeah, of course. So here's your problem. If this is an impulse, right? You need to end an impulse, of course, with a 5-wave structure, unless we have a bigger diagonal. But we'll figure that out. But counting this as a nice impulse here would be an expanding diagonal. And an expanding diagonal is very rare, never preferred unless everything else fails. Wave 2 and wave 4 in a diagonal have to be zigzag structures. They can't be impulsive, or they can't be flats. They have to be zigzag structures. So in other words, you're not allowed to wick the high, right? Or here, wick the high. This cannot be the end of wave 1 of a diagonal. This cannot be the end of wave 3 of a diagonal because you wicked it. Okay, let's see. So let me just put this on the chart, do this quick. impulse diagonal multi 1-2, right? Of course, a multi 1-2 is very unlikely. We're in the weekend as well. So if we look for a multi 1-2, I would look for 1-2 1-2, right? That would be. I wouldn't look for a multi 1-2 here at the moment, really. Also, this is an incredibly shallow retracement here. We have a move up. Ooh, very, very, very shallow. Not even close to the 382. Such a shallow retracement is more common for a wave B or an X compared to a wave 2, right? So again, potential for corrective here, right? So those are just small little things. Because for an impulse, we would need to count this as somehow 1-2. Either one ends here or here. Doesn't really matter. Doesn't really matter. Probably 1-2, 1-2, 3, 4, blah, 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 blah. Either or. Then we need 3, 4, and 5. So 1 is somewhere here. Doesn't matter. 2 needs to end somewhere here, right? Also doesn't really matter. We can end it here. And then 1, 2, 3, 4. Probably then 3 ending at one of these highs. So somewhere here. And then you have your 4. And then you have your 5. Now inside your 5, if we would end wave 4 here, then we would need to count 1, 2, 3, 4, 5. Now in that case, we would then need a contracting structure. 1, 2, 1. Oh no, wait. You have the wick here. 1, 2, and it's an ending diagonal, so all of the waves have to be 3-wave structures. So you would need basically ABC correction, ABC correction, and then internally another ABC, which means 1, 2, 3, 4, 5. 1, 2. This is literally you can't count any other. 1, 2, 3, 4. Yeah, it's not pretty, but 1, 2. Of course, this is longer now. This would be a way to make it work. But then wave 4 has to end here. That would be a running flat. Because then you have either a flat here, ABC, or a zigzag in A, B, B, C, or a WXY, where wave Y here is a flat, ABC, your W is a zigzag. That would be the only way, but preferably you end wave 4 here, so you make a contracting diagonal, because an expanding diagonal is very rare, right? It's very, very rare. So we don't like that. And if we end wave 4 there, there's no overlap with the high of a potential 1. What's this spike doing here in the middle of nowhere? Interesting. So okay, I mean 5-minute time frame. I mean, what are we doing? So is there a way to count it as an impulse? Yes. Is it nice? Nah. Can we count a big diagonal in here? I mean, preferably we have overlap between a wave 1 and a wave 4 in a diagonal. 1, 2, 3, 4, 5, right? Yeah, you have overlap with this, but that means that this is 1, 2, 3, 4, and all of this should be 5, meaning 5 is longer than 3, which isn't allowed in a contracting diagonal. Expanding is very rare. So diagonal is difficult here, and a multi 1-2 is not preferred. So an impulse would be your only potential here. There's at least an opportunity. Is it nice? No, it's not. It's not like a clear impulsive structure because of the overlap from here onwards, right? But at least it's something we have to keep in mind, right? That it gives the opportunity for example, an A, B, C, get a 3-wave in B, move into the fibs, right? Because we didn't actually hit the fibs, taken from the low to the high. You can see we didn't even hit the 382, right? Even if price would create a new high, you would still be looking for price to at some point move into the fibs, right? No problem. So bias wise, the fibs are interesting. Do we have support here? I don't really have anything going on immediately, so no horizontals. Let me just do this, and let me do this here. 1 second, 5 minutes. How high from here? There. Okay, so up 53,825. White. Sorry that I'm so focused on the chart, by the way, guys. Haven't really looked at chat. Sorry for that. And here, of course, we also have the value area high, value area low here of the volume profile. Oh, it's already on the 1-to-1. 5 minutes. What's happening here? There's the potential for an impulse. However, we did end the move here on a high amount of volume, as you can see, right? So this volume candle is highest in the impulse down. It's preferably wave 3. But we have such a long move here, preferably you have a finished impulse by now. 3-minute time frame? Yeah. Highest volume is in the low. It's not really preferred. We can, of course, 1, 2, 3, 4, 5. Guys, this is 3 and 5 minute time frame. You got to take this with a grain of salt. Like what I said at the beginning before jumping in, preferably you stick around on the 15-minute or higher, right? If you're doing Elliott wave analysis, that's where you get into the better time frames, no? But you do have a high volume candle in the low, so potential for corrective structures. Resistance identified, support identified, observe the reaction. It would be interesting to have a bigger corrective structure. Can this be some sort of a flat still? Expanding flat. We hit the 1.618 and taken from here to here. Also took the, okay, so that we are not looking for a flat here, A, B, C, right? Because you hit the 1.618, so it lowers probabilities that we have an A, B, C flat. So that increases the probabilities, guys, that this is a new move by itself. So a fresh, either a wave A, wave W, a finished A, B, C. But that means we can pull a fib time from the start to the end of this move, toggle on the 0.382, and preferably, from an Elliott wave point of view, preferably, we're going to make a low, right? After the 382, which is, well, I mean, just past midnight Central European time, 1:15 a.m. in the morning. This would be quite nice. Hit the point of control, hit the 1-to-1, maybe wick into the volume profile. Hit the golden pocket of the speed fan, and then range into the speed fan, and then of course preferably have it as support. If you lose the golden pocket speed fan and this happens, so this, you range in and then you're losing it, you quite often get a retest and you move to the 786. Of course the 786 moves up, so this is like your nice, like, important support, right, to both like the value area lows. So this would be an interesting bit of price action. Definitely something to look for. In this case, your bearish CVD divergences will play out. They will first grow a bit bigger because price gets to move up to the value area. Bearish CVD, price moves down, bearish CVD plays out. Price comes down, bullish CVD on the chart. We already have it here, but preferably we come down a bit further. Bullish CVD on the chart, but that's nice, but not yet interesting. The bullish CVD only becomes interesting if we can change around here and create bullish market structure with some fresh local bullish CVDs here. That's something I'd then be looking for. And if we pull a fib from the low to the high, and we also check what we have here, then we have, I know this is very messy, very rare for me to have such a messy chart, but we have the golden pocket with the value area lows, 0.5 in confluence with the 1-to-1. That's not bad. That's not bad. Some nice like bits of confluence. So that is, yeah, it's interesting. This would be interesting. Let me put this in a folder here. Wait, can I remove this piece? Yeah. Hoppala. Because you finished this candle on a high amount of volume on the 5-minute chart. So again, this is 5-minute and 3-minute. Yeah? But because you did finish on a high amount of volume in the low, the probabilities increase for this to be corrective. Right? So ABC, WXY, right? Because you have the volume in the low, and preferably if you look at an impulse for a simple zigzag ABC, right? Preferably in an impulse you actually have the volume in the middle in 3. Does make me think, of course, 1, 2, 3, 4, 5. This can absolutely be a wave A, by the way. But then again, it would be part of a corrective structure. So in other words, instead of counting this as a wave 1, 2, 3, 4, 5, and down you go to new lows, the probabilities are higher that you're still looking for a weekend range, corrective structures, likely price still taking out the high at the moment because of the highest volume in the low here. Lower probability of it being a wave 1 of a bigger impulse to the downside. Increasing the probabilities, you're looking at a corrective structure to form here. Increasing probabilities to still take out the high at some point. Yeah, this is it. So areas of interest identified. Of course, we have resistance to the upside. I always observe the reaction because that's how I trade. I never set limit orders. I never I have nothing set here. I have nothing set here. What I like to do in my personal trading is just set an alarm. So we can set an alarm here. Can set probably on top of the point of control. And then when my alarm goes off, I'll have a look, right? I'll have a look. I observe the reaction. Do we get resistance here? Do we start moving down? Volume, CVD, market structure, Elliott waves, and then I'll make a decision, right? Usually when a resistance or support level is hit, it still takes at least an hour, if not longer, for me to do something. But this is 5-minute time frame, so of course, preferably I see stuff on the 15. But I will, So yeah, there you go. Some people asked about low time frame. Do you have any ideas? Yeah, I pretty much covered that. So let's put this in here as well. Beautiful. Is that the gun fan? No, it's the speed fan. These questions cannot be answered. It depends on the range that is going to form. Now, if you take 57K, then the answer would be yes. But that is not the low, as in we can't go below 40 or 52K anymore. You know what I mean? You have at least a temporary low. But for now, as mentioned on Friday, which is yesterday, we were looking for price to hit the support, right? Because remember, we also had a box here, right? There was no reaction, only weakness, bearish CVDs. Then we retested the box, right? I made my final update here. I said, look at support, right? Area of interest. Weekend is coming. Probability is higher to range, right? You can go to the video of Friday night, which is the previous video, actually. I didn't upload today. And here is the range. And now what we do as analysts is observe this range. So yeah, it's just a weekend range. We hit support, move towards the upside. Absolutely beautiful. The weekend range it has started, and we now observe the structures here. Right, it's still very young, as you can see on a 30-minute, 50-minute. It's still a very young range. So see if we of course we get more price action because it's just a matter of time, but see what structures we get. Bullish CVDs here, bearish CVDs here. There's a mix of both. But when this happens, right, what I also prefer to see is new local CVD. If you move up here locally with consistent 3-minute bullish CVDs, of course it supports the bigger bullish CVD, right? But if you change the market structure here, hit the resistance, right, the value area highs, right, hit the resistance, change market structure, consistent bearish CVDs, it helps the bearish CVD. So that's how you can use 15 and 3-minute time frame. So yeah. Where were we? We were, what's up, Leva? Good to have you here. Graham, is there any information how to use and set up the Fibs tool? Couldn't see any videos on the channel from complete. Okay, so a video about how to set up the Fibs. I don't have one, but I can make one. Very, very simply, right? If you pull a Fibonacci on the chart, you are going to see this. Do I have the default still somewhere? Apply default drawing template. Yeah, okay. So you are going to see this when you pull your fib on the chart, right? First of all, by the way, you always pull the fibs from the left to the right. From the left to the right, right? Now, these fibs that are pulled from a high to a low, right? From a high to a low will show you resistance, right? So if price moves up, these fib levels can be used as additional resistance confluence. The most interesting fibs are the 382, the golden pocket, arguably those two, and after that come the 05 and 786. I would class the 382 and golden pocket as like, those are your favorite, like 4-wave Bs. Like I couldn't stop making it too complex. Most common retracement area is the 05786, right? And the 382 is common for B or X, but not for a wave 2. Okay, there you go. So these are the fibs taken from a high to a low, right? And therefore these are confluence for resistance. When you take the fibs from a low to a high, also from the left to the right side of the chart, right? You take it from a low to a high. Now the fibs are support, right? These are areas of support. Mind you, I do not use this at all. That's why we have the extension tool, right? There's a reason we have an extension tool. So I don't use anything over the one. Especially in the beginning, I also don't recommend using it. So this is step one, right? Take it from the left to the right, from high to low, resistance, from low to high, support, okay? Now, if you want to customize your fib, you double click, right? And you see all of this. Now, first of all, if I turn them off, you can see they disappear, right? So I can be like, okay, I only want the 236 on my chart. There we go, right? Turned everything off, 236 is on my chart. But maybe you have a certain fib level, right? Whatever it is, and you want to, you don't have it here, and you say, okay, you know what? I want the 0. Whatever. I want a 0.4567. Ta-da, right? You can just change it. Turn it off, turn it on. Now, this stripe on the chart here, trend line, on or off. Sometimes it may help you to identify, wait, how did I pull this fib? Usually on my charts, I don't have it on because it creates mess, and I don't like mess. Then we have extend lines left. I mean, it kind of speaks for itself. Now, of course, wherever I go, you can see the line is extended to the left side of the screen. Same with right? It extends to the right. Like if I do this, yeah. So I can go up, down, left, right, doesn't matter. It's extended. And if you want to save a template, so imagine you want to have a template with the most common target area. So that's the 05, right? or let's let the 05, as mentioned, the 05 to the 786 is generally the most common retracement area for wave X, wave B, wave 2, right? Now, you toggle on the 05 786 to create that whole area, right? And what you can then do is turn the background on or off. First of all, I always have it off because I don't care about the background. Again, it creates mess. What I do is I personalize, right? So I use the square, and I make my fibs the same color, and I then pull one myself, right? So I customize it. Yeah, so background, right? Use one color. You can also say, okay, boom, make them yellow. Beautiful, right? Reverse, don't use that. It's not relevant, right? And then, of course, do you want to have the price on? Yes or no, right? 55.2. Do you want to see that or only the level? The only reason I toggle this on is so that people in the content can see the level. I personally don't like it really because it's messy. It's again, it makes things longer. I only really care about, that we have a level here. But because I make videos, if people then zoom in or they want to watch, or of course in the videos, I talk about the levels. Common target for wave 2 is between the 05 and the 786, which is between 55K and 45, whatever, right? So that it's easier for me to read it when making the content. So that's why I have the numbers, and it's easier for people to follow because they can actually hear and see it. But you can, of course, do whatever you like. I'll leave it on for now. Now, then you have the levels, right? So do you want the 786 and the 05 on your chart, or do you want it just like this? Cool. I never use percent, by the way. Labels left, of course, speaks for itself, right? Middle, or just above, or just below, right? And then we have text. Now, text is an interesting one. That's relatively quote-unquote new. So what you can do is move with your cursor on the fib, click, and then say something, right? Maybe you want to write invalidation because it's an invalidation. Here, line tool colors. Here you can also select a color, right? This is when you click on your fib, this box pops up, and you can just select any color here. You can select the thickness, I suppose, of your fibs, right? These are the templates. I'll get to that in a second, how to make them. And this is your settings. This is lock, which means now I can select it, but I can't move it. It's locked, right? So I can't move it. I have to unlock, and now I can move it, right? And this is, of course, the bin. So we go to settings. And if you want to save this as a template, so you're happy, right? You're happy. You made a template 05786. You go to the bottom here. Oh, you can't even see it. Oh, there you go. You go to the bottom. You click on template. You click on save as, and you say whatever my name. You name it something. Click on save, right? And the next time you pull a fib, click on these boxes here, templates. And here's your templates, and then your template is in there. That's it. That's all you need to know, and then you're ready. Bybit CVD volume is so low compared to the blue line. Yes, it's absolutely credible, but this is where maybe you have another preference. I use these two CVDs for years already with an unbelievable amount of profit, so they work for me, but maybe not for you. But it's interesting because people tend to think, the other one is aggregated, so it must be better. But it's not true. You can track statistics if you want, though. They are literally both equal, and they work in sync with one another. But the thing is, this is, of course, my template. I do know people that change the template, which is perfectly fine, and people should, to make it their plan. So you can make it 4 lines or 1 line, or use another platform, but of course, the moment you do, your analysis is going to change, of course, because you will. Every CVD line is a little bit different. Largest structure we're in on the daily, WXY, 112 to the downside, finished ABC with a bigger diagonal at the moment. Those are options, but I prefer looking on the 4 hour. The 4 hour is better at the moment than the daily, really. 112 is bearish, by the way. finish structure with the low at 49k would be a bigger diagonal, but it's too early. WXY with the triangle in Y, also early, and a triangle is not really common. So the daily is not looking good for the bulls. You really need to, first of all, move above 57 minimum to give it some hope, and then take it from there. Any chance to 42k? Hope all well. Bitcoin to 42k. Yeah, there's definitely a chance. Yes. What's up, Mike? How you doing, man? This guy. Oh, Mike. Oh, man, what's up? Good to have you here, popping in sometimes still, man. I appreciate it. Bulls are alive. You know, like, wait, just be patient here. Bulls alive. I mean, we have a bit of a relief rally, but take 57k and you might look for a bigger retracement at least. Yeah. By November, ETH to 1400. I think at ETH 1400, we had something on the chart at 1400, but I forgot what it is. I would need to check. Yo, T. Clepson, change your name again. On a weekly time frame, you are correct. But I prefer to look on the 4 hours. So the weekly time frame probabilities are still bullish. Yeah. But this is, of course, the highest time frame, right? It's the weekly. Before the weekly time frame turns bearish, you first have a 15-minute bearish, turns bearish, and then the 1 hour, then the 4 hour, then the daily, and only then the weekly turns bearish. It always starts on the lower time frames. So that's why the 4 hour is so interesting. I already answered that one. XRP would be something for tomorrow. How far ahead you plan the trade, and are you not concerned the price will move fast and you miss out? Yeah, but if I miss out, then I just wait for the next opportunity. I have no problem with patience. There's enough setups for me during the week, during the month. So, you know, I can't take all, right? And I know I can't take all. But I also have a life, and so should you. So if you are out with family, right? Imagine, I'm curious what people do. If you are with your family in a restaurant having dinner and your alarm goes off, what do you do? What do you do? Do you grab your phone and quickly check the chart, check the reaction? You're sitting at the dinner table, you're doing your analysis. Do you enter, or do you leave your phone in your pocket and be like, I'm with my family now? Grab the phone and FOMO trade. So in my case, I leave it. I don't grab my phone. I'm with my family. I'm spending time. I just let it go, because I know there's always another trade. There's always another one coming. Like next week, next day, you know, there will be something coming. And if I am trading, for me, of course, it takes time. So if I am not focused with my, like, first of all, I never trade on the phone, period. Also, I want to do my risk management. So when I see something, I want to put it on the chart, calculate the percentage, calculate my position size. I have everything set on my desktop, right? On my PC here. I got the Excel sheets and everything. So of course, if I would trade with limit orders, I can just set a limit. But if I set a limit, I don't need to set an alarm, because I don't like, if I would limit trade for example, sometimes for bigger swing positions, I might put in a limit somewhere. But if I put in a limit, I pre-planned it, so I don't need an alarm, because I don't need to see the reaction. I already pre-planned it. I have my invalidation, which is also in the books. So the moment my swing is hit, the stop loss is in the books, take profits are in the books, or maybe no take profit, depends on the trade. But I don't need to set an alarm, so I won't have an alarm. I only have alarms at areas of interest where I then observe the reaction. But when I'm having dinner, I won't observe the reaction or look at what price is going to do in the next hour, because I'm with my family in the next hour. So I don't want to look at the chart. And I think that I talk a little bit from experience because, of course, nowadays it's easy to say. But when I started, this was more difficult because when I started back in the day, and I did not have a clear plan, I sometimes had the urge to take every opportunity because I didn't really have a plan. So it's partly emotion, like, oh, price is moving, so I got to be part of it. But if you so in other words, your alarm goes off and you're like, oh, I got to do it. I got to do something because price is moving. But when you have a plan, in other words, when you know exactly what you're looking for, if this and this is hit on the chart, right? Like a plan can be if the VWAP and the golden pocket, very simple, those are only two tools. If the VWAP and the golden pocket are aligned and price hits the VWAP and the golden pocket, right, in the same area, right, that's an entry. Or at least I put an alarm there and I observe the reaction. Now, back in the day, I would be like, oh, price is moving, right? But if you have a very clear plan, preferably based on data and statistics, you will know how many setups you have per month, right? You will know and realize that if you miss a setup, it's no problem. It doesn't matter if it was a winner or a loser. In the end, you trade statistics, right? You just trade statistics and eventually you turn out to have profit because based on your statistics, you just follow your plan. So the better, like, if you do not have a plan or a strategy and you don't really know what you're doing, but price is moving and you want to be part of it, the urge to trade and grab your phone or laptop while being in a social environment is higher than when you have a plan and you know what you're looking for and you know your statistics, you know how many setups you have per month, you know exactly what you and because of all that data and because you know, you'll be like, oh, no problem, I'll grab one later this week. You know what I mean? And and this is again where I also think having a plan or a strategy can support you in real life environments as well, right? Cheers, Tommy. Yo, Jannis, how you doing, man? Good to have you here. Good to have you. Do you only trade Bitcoin? Yes, I only trade Bitcoin. How far ahead do you plan to trade? So that was the initial question. I set my alarms, but I'm a market entry trader, not a limit trader. So I observe the reaction, and if I see what I want to see, I enter. Generally, when I have an area of interest, it takes... I have these statistics in a sheet. Out of my head, it takes, like, in, what was it, 87 or 89? I don't know. In 87% of the cases, I have to wait minimum 4 hours for me to enter a trade. And in 34 or something % of the cases, I have to wait longer than a day. So it takes like hours for me to observe the reaction, see what I want to see, and then actually enter. I have the statistics, but I don't have it open. So yeah. Let me quickly check. I don't want to open my whole statistics, but I got stuff in Diamond. 1 second. Let me have a look here. Okay, not that. Where is it? Oh yeah, here. 88% of the time it takes at least 4 hours, and 58% of the time it takes over 12 hours. 80% of the trades take over 6 hours to reach TP. 39% of the trades take over 1 day to reach TP. And then I have more data, but it's not in the file I have in Diamond. So, yeah. What's your opinion on taking out a loan to trade? If you don't have the money, don't trade. Don't risk money you don't have or can't lose. I definitely do not support this. Of course, using leverage is quote unquote like loaning money from, if you know what I mean. But you can't, like, if you use leverage, you have a liquidation, which is simply closer to your entry, and you lose your real money. Taking out a loan, like, I don't support it. I don't support it. I think it's really stupid, because if you do not have the money, like you're going to get a loan. If you lose the whole loan, you're in big shit. What you can better do, Oliver, which is what I would recommend, is try prop firm trading and go to FTMO or one of the biggest. Don't go to those like small little shit new platforms, right? Go to the big ones, the proven ones, the ones that have been out there for a long time. And you can, I don't know how much they are nowadays, but probably for $50, you can get a 5K, 100K account. And if you prove yourself to be a consistently profitable trader and you pass usually 2 phases, you will get that account and you can trade with 10K or 5K, whatever it is, right? Now that is better. Why? Because so first of all, it's only $50 or only $100 to buy a challenge, a prop firm challenge. Second, you will only get that account if you prove to yourself you are profitable in those 2 periods. So you do something right. I mean, of course, you can gamble your way through it and be lucky, but then you're going to lose the account very quickly after you got lucky, right? So you kind of need a plan and a system to pass the challenges. And then you get an account of 5K or 10K, and then, of course, you can start to make some money. And then with that money that you get through that prop firm, right, it comes to your bank account, you take it out, you can buy a bigger challenge, and then you pay, I don't know what it is, 150, 200 for maybe a 25K account. Does that exist? Or a 50K account or whatever, right? And then you pass that challenge, and then you trade with the 2 accounts together, and then, and that's how you skill. But I do not support people taking out a loan to trade. I think that's stupid. I think it's much better to buy a prop firm instead and prove to yourself that you can do it. Fixed range volume profile settings. Oh, and this, of course, row size. I have different row size templates. So first of all, this is it. And then my templates are these. Yeah, family first, same here. Don't like to enter trades on the phone? Me too. I can't on the phone, man. I can't. Trade stocks. Are stocks slower, Obelix? I've never actually traded stocks. I take a trade, no stop loss, enjoy the dinner, excuse everyone at the table, go toilets. If I'm in red until I lose like pro and pray to gods of the market to get me out at break even. That can be a long shit, yo. Yeah. People are gonna be like, yo, have you seen Mike anywhere? Is he okay? Is he sick? Did he eat something wrong, or And then they're gonna like walk to the toilet and be like, yo, Mike, you good? And you're like, yeah. Almost finished. Almost ready. 5 minutes later. Yo, Mike. Yeah, I'm almost there. Yeah. Do you use TradingView to see VWebs? Yeah, I mean, it was just an example, right? The VWeb story, but there you go. If you do want to use it. No, I was talking about the normal VWeb, but you can also use an anchored VWeb, of course. Yeah. How would you enter a short on the current Bitcoin chart? This is my personal strategy, which is only stuff I share in Diamond. This is not something. First of all, of course, it's something that I worked very hard on creating, my strategies and my way of trading. So I can't just put it out there, but I do have it in Diamond with 1-pagers and rules and stuff. But I can't just answer that question, of course. But let's just say that I always look at the reaction. How much Bitcoin goes up? These are questions you cannot answer. How much does it go up or down? We cannot be certain about price values. We can only talk about probabilities of moving up or down and trade accordingly, following a plan. Make sure to check the analysis that started at 14 minutes in the live stream. I will put the timestamps in the stream afterwards. But yeah, so make sure to check out the analysis. Elliott wave analysis started at 14 minutes. I was a bit lazy. I didn't put a pinned comment in the chat. And then idea we just had was this. And would be quite interesting on the lower time frame. But let's see. Yeah. Gold is the best to trade. Yeah. Oh, so your favorite is gold. Yeah, mine is Bitcoin. I like Bitcoin. Yeah. Thanks so much for talking about what you have in the last 5 minutes. I don't know exactly what helped you, but I'm happy it did. Taking out a loan is risky. Yeah. How to use the volume profile? You use it to analyze ranges. So, for example, right, if we are expecting a range here, it's weekend, so we kind of do. What you can do is pull a volume profile from the low to where price is now and see what the volume distribution is. So what it shows is the most amount of volume of this price action since the low has been traded at the red line, right? And the 6 or 70% of the volume that has been traded since the low is contained inside the blue lines. Now, arguably, you can say, okay, well, I can pull a volume profile from the low, but I can also include this bit of price action. Because if we would go to a 5-minute time frame, then arguably you can say, okay, well, we can also say the range, right, is from here to here, no? So we have over here the start, we move to the downside, move to the upside, and now we start to move down again, right? Midline over here of the channel, confluence with the value area low, interestingly. So that is why you can then also pull a volume profile from here to the end, and then you can see like, oh, is there confluence? Is there a difference? Yes or no? So this is a way to use it. Now, if you go to a daily time frame, right, you can obviously do the same. You can say, okay, I take it from the high to where we are now. Okay, that gives you this volume profile. However, you can see price here. If you go to the left, oh, we have a range, right? So we can also say, well, arguably, you are currently looking at this range here. So you can also say, well, from the high to now, or we include this piece of price section, right? I'll take this order block here on the daily and then move it to the right and then see, oh, is there confluence? Is there a small difference? Yes or no? You can see value area low, point of control is exactly the same, right? So that is how you use the volume profile. If we go to a 4-hour time frame, right, we can do the same. We can take a volume profile from the low here to where price is now. Right? What I like to do is also, oh, well, we move down, right? We move down, but you can see that over here, we were pretty much ranging sideways. Of course, we got the recent drop down, but we have been ranging pretty much sideways. So what I like to do is then also just put a volume profile here and check the volume. Okay, this is an interesting level, right? In this section here, in that range, highest volume is the point of control. Right, volume profile of this whole piece from the start, from the low to where price is now, oh, it's quite similar. But then we can also say again, well, where's my brush? The high is here, right? Okay, we go to the left. A little bit of a range here, no? So then again, we can say, okay, cool. We can have this as a range. And then I just pull a volume profile from here to where price is now, right? It includes a bit more information, see what we get, and then check the confluence. So that is how you use the volume profile. How to use fixed volume, that's literally what I just showed you. I see. Yeah, Obelix. I think that's a great point. And that's also why in the weekends, also with the content, I like to take a step back. And spend a bit more time with family, friends, activities. It's important. It's balance. It's balance. Yeah. Pleasure, ZX. Yeah. So in a nutshell, So first of all, if you go below the video, you see a join button, and it will pop up a video with some information. I will make a updated membership video very, very soon because there's a new level coming called Platinum, for the CVD template as well. But in a nutshell, bronze doesn't get you anything. That's just support, which is like $3. Then you have silver, which is $10, like short-term updates. And in the morning, like basically before every video update, I tend to write stuff in silver as well. Plus in between content, whenever something happens or I have an idea, I will put it in silver. So I write everything down. I take pictures. I share my thoughts and what I'm looking for on the chart and CVD, and it's just short-term updates, but also it's the video in text. Gold is all about shortening the learning curve of learning Elliott waves. So if you want to learn Elliott waves and shorten that learning curve, then gold is the place to be. Very active group. It's the place where I am most active, talking about Elliott waves. There is additional content besides the public YouTube playlist, which is very complete. Those are short and very to-the-point videos. In Gold, there's also a playlist with longer videos. Of course, the scenarios are the same, but I talk a bit more about stuff. And there are some other things in there, like stuff about order blocks, volume profiles, target boxes, but in more detail than public. And I have playlists in Gold as well, where I like a lot of videos about how I count an empty chart to a full plan to show people the process, right, of how it works. I never give signals. If you're looking for signals, you're at the wrong place. I'm very, very hard with that sort of stuff. You either learn to fish here or not fish at all, basically, because I don't do anything with signals. I think it's very bad in this industry, like the signal stuff. I'm pretty sure I can, quote unquote, because this is how it works, I can make a lot of money, because this is how it goes. I can make so much more money to say, guys, I'm sharing signals, right? You just pay this, or you pay this, right? You pay this membership here, $200, and I don't care about the money. I got stuff, so I don't want to go in that direction. I think it's really, really bad from influencers to do signals and stuff. It doesn't teach people anything. I think it's very weak. But anyway, that's an industry problem for another time. But anyway, so Gold, learning curve, and then Diamond. Diamond is about creating your plan or strategy. Now, this is where you have your long-term benefit. So if you are in this industry for the long term, and you want to be a consistently profitable trader, you need a plan, right? You can't just trade on your emotions and be lucky. It's not really how it works for a few years. So if you are committed and determined, that's the place to be, because that is where I share the steps of how to become, or have a great probability. You can never say everyone becomes, but the great probability of becoming consistently profitable. Psychology talk. My plans and the way I trade is shared in there as well. So it's an example, like, okay, what does he have, right? What are some of his rules? Can I use similar rules? Can I maybe even trade his strategy? Maybe it works for me. Maybe it doesn't work for me, right? Depends on the style of trader you are. Depends on your psychology. But it works for me. That's most important. So I share stuff about my way of trading. I share my risk management Excel sheets. I share one-pagers, big PDF with detailed rule explanations, and then additionally there's like a lot of CVDs for different altcoins, and like there's many different channels with stuff. So that's Diamond. Diamond is about creating that plan which is going to get you to profitability consistently, right? So, and with regards to signals, I don't do signals. So I'm an active trader. I sometimes what I do is in the setups channel. So that is a free channel. Link is in the description, and a similar channel in Diamond, but in the description also it's just a free thing, because it's not necessarily what Diamond is about. I sometimes explain why a certain setup may be interesting from an Elliott wave point of view, just so people also see how to trade Elliott waves, because learning Elliott waves is one, knowing the probabilities is two, but actually trading it is three, right? And it's difficult for people to trade Elliott waves. So I sometimes explain like, hey, you know, we have a couple of scenarios. Now, based on this and that and X, Y, Z, this is interesting to look for. And then sometimes I take that exact setup. Sometimes I don't. You know, it depends on the reaction because I'm a reactionary trader. So, but at least it helps people to identify. Okay, so this is what Koen is looking for. This is how Elliott waves eventually are translated into. Okay, this is a setup. These are the probabilities. Okay, I understand. And hopefully by reading all my explanation about why is this interesting, hopefully people start to understand how to trade Elliott waves for themselves. So when they see a scenario on the chart, they're like, oh wait, okay, think about, okay, Koen approach it like, and then, okay, boom, right? So hopefully it teaches people to use Elliott waves. Yeah. So that's that. If we had the local wave for 618, then a wave 4 is invalidated. Yeah, but the most bearish one can be another one too, Sarada. So you would need to take 57K to turn quote unquote bullish, but at least look for a bigger retracement up. You look for a bit higher. Palmit, welcome. Bonsoir. Good to have you here. Because I see an ending triangle. You probably mean an ending diagonal, I guess. Or you mean a wave Y maybe. 6 to 8. Probably the low you mean. I don't see a triangle in here. I guess ending triangle, I think you mean an ending diagonal. But I'm not sure if you mean this 1, 2, 3, 4, 5. But if you talk about this being a diagonal, it's not something I look for at the moment. I don't count a diagonal in this price. I haven't like it. I'm not even sure if it's viable. I guess 5 is shorter than 3. 3 shorter than 1. But no, I think actually 5 is longer than 3. So it might not even work. But I would need a picture to see what you're looking at, because I don't see an ending diagonal from 6 to 8 like this move here. This is very much like a 3 wave. So as SE, what I recommend is a screenshot of your scenario, of your chart, right? Go here to the right top, click on the camera, take a snapshot, right? Click on that, wait. So click on it, copy image, and then post your chart in the Discord group and tag me. I probably won't get to it tonight though. I still need dinner, but maybe tomorrow. Which Fibonacci level you like the most to combine with the volume profile and confluence? That would be the golden pocket. For sure the golden pocket. If I had to pick one, golden pocket. Because the golden pocket by itself is the most interesting area, and in confluence with like a point of control or value areas, it's nice. Yeah. Oliver, by the way, Oliver. Okay, not Olivier. You're one of the few people that analyze with no bias and trade probability. So many of these people saying Bitcoin to 500K over leverage and are surprised getting liquidated. Well, it's actually, yeah, true. I think so. Of course, I got my scars, right? I learned my lessons. Of course, I'm not perfect. I have made my mistakes in the past, but the thing is, do you learn from them, or do you keep making them, right? So, in the beginning of my journey, of course, I lost and I made mistakes, and then I won again, and then I lost again, and won again, and lost, and but I guess having experience and again having a plan will significantly help you with the emotional side of things, which also removes bias, removes FOMO, removes fear of losing or fear of having paper profits and you want to actually TP but it didn't yet hit your TP, right? Are you going to close early or not? If you have data, if you have statistics, if you know your best risk reward ratio, if you know what you're looking for and your win rate, that stuff, like those psychological things are 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 reduced, right? Their impact become a lot less. So your bias, you don't care. Like if you have a plan or a strategy, you don't care anymore about up or down 100K or 10K. You just trade your plan, right? You just trade. And that's exactly where I'm at. I don't care. I really do not care if we go to 40K or 80K, right? It's not going to like change anything. I just trade it up or down. You know, just give me volatility. I'm happy. But how exactly can you use the volume levels? Yes, those are support resistance levels, Suleiman. Yes. And it's nice in confluence with other tools like Fibonacci, for example. So you can use a volume. So for example, I'm not sure if you were here, but on the 15-minute, what we did earlier, like you can check the analysis. But then people ask me like, "Yo, can you have a look at the 15?" I'll have a little look here. So what I then did is I removed the brush for a second. But what you can see is, because for the brush, to understand the brush, you need to check the analysis. But you can see I have two volume profiles, right? A bit of resistance here and then a bit of support here. You can see a speed fan as well. So we got a bit of confluence, and then we have the point of control here, right? The 1-to-1 for potentially, wait. I think the one, oh yeah, if we would move up to like 54.6-ish, the 1-to-1 is going to be here, right? If that's it, then we have the 1-to-1 in confluence with the value area low. So this is how you like, different tools, and then ta-da, and then you got areas of interest. So that's how you can use it together to create areas of resistance, areas of support, and then observe the reaction at those areas. For gold would be something for tomorrow. Tomorrow is the quote-unquote altcoin stream, but gold, SPX, Nvidia, those sometimes pop in as well, and I can add them to the list. Yeah. Cheers, Saraga. Giannis, I've learned so much from you so far, also for things outside of trading. That makes me happy, man. That makes me happy. That's really kind of you. Thanks, Giannis. I don't really know. Like, look, I hope I can have a positive impact with the content I make. I'm standing in front of a camera, well, my laptop, right? On Instagram, you often see my setups and stuff. Setup as in screens, by the way. I have my laptop. I'm standing here in a room in the south of France, lonely. I don't know how many people are watching. 123. So you are somewhere in the world tuning in, watching this random guy doing like now chatting and Q&A. We already did the analysis. And I just hope that with whatever I share on the channel every day, I can help. And if that's on the charts, off the charts, helping people to create a plan, trading psychology, whatever. I don't care, but hopefully people take something away from it. And I guess in a way people do, because of course, if I get feedback by yourself, right, Jonas, and other people that write me. And sometimes this is really cool. Like I get an email of a viewer, like a lurker or an active viewer or a Discord member, and they write me an email and they share more about their story and how certain things have helped them out, and it's so it's so nice to read. Yeah, I guess in a way the subscriber number also reflects if people take away something from the channel or not. So if I would do a shit job and I'm a shit person and all that stuff, then I won't get people to subscribe, right? They won't like the content. If I'm always negative, if I'm never having fun in front of a live stream, right, you will feel it. You will feel if I'm passionate or not, right? If you look at a creator, if that would be me, for example, and I would be live every day, and I'm negative and I'm angry, and people don't want to watch that bullshit, right? But that's not my personality. I love what I do. Hopefully people learn something from what I do, because I do it well. And then, yeah. So we now have 13,500 subbies in 1.5 years. So I guess something goes well. And I'm happy to hear that you learned something from me on and off the charts. It makes me happy. Also, Mr. Power Meat. Mon maître. Mon maître. Bonjour, monsieur. Bonsoir. Je me balancem. Welcome. If we go to 52, 51.5, that means we're going to hit the 886 from 49k. So probability is high to take the low. Correct. Yeah, correct. Mind you that quite often price does like to retrace to the golden pocket. Would be interesting. Did we probably then didn't yet hit the 8. I actually didn't check, but let's have a look here. So no, we're not there yet. 50.8k. What is interesting, of course, is that we are below the golden pocket. But yeah, if you hit 50.8 here, then the probabilities indeed are high to take out the low. Any move of the 886 to the upside has a higher probability of being a wave C or a wave Y, increases probabilities to then later go down and take the low. Now what happens relatively often with the 886, which is why this is a template, is 886 golden pocket and then either move down or the 0.5 maybe down, but of course there is the possibility to get a bit of a bigger retracement. But after an 886, even if you do take out the high at 65, probabilities remain higher for a corrective structure unless you start to hit the 1.618, and of course you start to form very impulsive structures. But at the moment that would be short, that would be all-time high. So before you would reach all-time high, we will know, right? But most commonly, yes, hit the 886, probability is high to take the low. Correct. Cheers, Tommy. Appreciate it, man. Pleasure, Salomon. Like I said yesterday when we were chatting about plans, you're not. Cheers, maybe a band-aid. Yeah, yesterday in the mod group, I asked, yo, who is an entrepreneur? Because I actually realized that in the community, there's actually a lot of entrepreneurs, many business people. So I was curious. I said, yo, in the mods, I said, yo, guys, who's an entrepreneur? And then, like people share stuff about what they do or have questions, or maybe they want to, they're not there yet. But I've been an entrepreneur now for 2024, so that's like 6-7 years, and I've had my fair share of fails and successes and experience. So yeah, we were talking about it in the mod group. Wish there was an Elliott Wave school in New York. You mean an offline school? Yeah, I mean that would be quite interesting, no? I don't know, like I think most of the Elliott Wave stuff is online. I'm actually curious. Would you attend an offline Elliott Wave? I wouldn't like to call it a school. If you would be like, okay, for 1 week, you're gonna like fucking no live Elliott Waves, right? Or a weekend. I don't know. I don't have a time in my head. Like you're gonna go through everything, right? I don't know how long it takes if we go die hard, but I think a weekend would be quite short. I'd be curious to see who would register to something like this. Because, of course, first of all, you need to be diehard about Elliott Waves. You really need to want it. And then, of course, go somewhere. You need to stay somewhere in a hotel or Airbnb. Attend the event for a weekend or 4 days or 5 days, whatever, And then, go hard in learning Elliott Waves in that period. So it's like no distractions. It's literally grinding, right? Like, of course. So sometimes I get a question, Yo Koen, are you gonna organize an offline event? And I sometimes think about it. So first of all, it's not planned. But I have it in my list. So with Jeroen, my employee, we have a to do and planning. And in the planning, there's projects, and there is on row 12, there is events, which is currently labeled at the status as just an idea. Priority is low, and then we have in the notes offline events start in Europe. That's all we have, because I got questions, and when I get those questions, I just write it down. So we never thought about it; we just wrote it down. So, but. Maybe one day I'll be like, yo, we're going to organize something and go hard. So, is there any chance to catch the down wick and do swing candle, yes, especially if you're looking for wave 4 price action, that would be common. It's common for a wave 4 to retrace back to the if you're looking for 4, which is one of the scenarios, then it's a scenario that can happen. But we did retrace relatively high here. Not really sure if I'm looking for a WXY or a flat in that case. So it's very early, this range. Of course, we can still have a zigzag ABC, WXY, triangles. It's all still there. How will we know if all-time high is on the way? Well, we will continue to observe the waves. At the moment, for all-time high, right, to increase, like it's too early but at least for the bulls to show a sign of strength would be to take 57K, right? And then depending on the move up, we can count it as an impulse or a correction, and that's what's going to determine all-time high. But we are at the moment, we are far away from seeing all-time high anytime soon, really. And I'm not talking about, it's going to take 2 years, but I think it's gonna probably take a few months. Yes. A 1 month neat retreat. Nerd retreat, yeah. The offline event is gonna be a yacht party. Currently in Monaco, I was there earlier today. They're setting up the yacht event. That's cool. Brendan, that's 100 per month for 3 months, and then you can, after 3 months in diamond, you can go down to paying for gold or silver and remain in diamond. So it's 3 months, 100 a month, and then 25 or 10, but you remain access to diamond for however long you are a member. How do you trade a range or a breakout of a range when not clear of direction up or down? Well, ranges are generally easy. So range trading, right? So trade the range until it breaks, they always say. So you got to find a good range, right? You pull your range tool as well. Of course, this is easy because it's historic price action, but you can do it with any. Wait, whatever. Now, Bitcoin ranges 80% of the time. Right? So trading ranges is actually not a bad strategy. Now you can see this is actually a nicely respected range, right? So we have a bit of support, resistance, then we have here resistance, support, resistance, support, resistance, midline, breakout, support, fills, low. We didn't really touch the high here, but then we have that midline, boom. So generally, like with ranges, the most easy way to trade, but you still need a plan because you need to be able to identify ranges forming, right? So first of all, you don't yet know there's going to be a range here. So you can't short this unless you use something else. But the moment price goes down here, right? 3-wave structure. And then you go back up. You're like, okay, we had resistance here. We had support here. So this is an interesting level, right? This is a support resistance flip. And the moment price then here moves up, in a corrective structure, of course, preferably, then you can start to pull your channel. And then you can start to trade it, right? So you can be like, okay, the high of the channel, if price is going to break this high, that's my invalidation. TP1 in the midline, TP2 or close at the bottom, preferably close because you're range trading. And then at the low, you're going to be like, okay, low of the channel, right? Boom. I'm going to have my stop loss somewhere. No, we did have a bit of a wick here. Even if you got wicked out, imagine this is a loss. Oh shit, I got wicked, right? Oops. Loss, no problem. You just wait. Oh, price comes back in, retests the channel, stop loss below the low, take profit 1 midline, close on the other side. And then we go up. We didn't really reach the top here, but we did here. Okay, up's next, right? And then take profit on the midline. I mean, we missed it by a few dollars, but come on, TP. And then this is going to be a loss. But this loss is covered by all the profit you made earlier. And then here price is moving back inside, right? So as this candle is forming, right? The moment you break here, the structure. Next, right? And then you have here. Next. Maybe you are stopped out here, maybe not, but it doesn't really matter, because even if you do get stopped out here, there's a new opportunity later, and then TP1 is midline, and tada. You see what I do, right? So it's like range trading. The midline is never an entry. The midline is only a take profit when you trade ranges like that. But it depends on, you first need to have the skill to identify a range forming, and then you can start implementing this stuff, you know. It's a lot easier now because this is hindsight price action, but if we go to a 15-minute, 5 minutes, this range is still very young. It's very young, but currently we have a high here. So arguably, of course, let's see, do we have support resistance, or are we too low? Let me have a look here. It's too long ago, so that's not relevant. 15. Of course, in this case, we have price breaking out of the channel, come back, hit the top line of the channel. But that's version 1. This would be another one. I might be more interested in taking the highs as pivots here. So this is the beginning, right? This is only interesting because it's weekend, you know. So it's weekend. We might actually now form a range here, and we expect price to go sideways. But I like to do it minimum on the 15. The problem is that on the 15-minute, I don't really have a reference here. It would have been better if we actually had this, and then I could be like, okay, you know. So yeah, it's I mean, this is quite. So we have over here support again, midline. But yeah, it's still like what I said at the very beginning of the stream. It's still a very early range, but because we expect ranges during the weekend, you can pull these type of channels, and then observe the reaction at the channels. Cheers, Patrick. Okay, Mr. Brownbuck, how you doing, man? Yeah, cheers, Brendan. Cheers. Ask many questions. Ask many questions. Would volume profile help clarify the range? Yes. You can use volume profile as an additional tool. So if the top of the channel or the midline is in confluence with value area high or low, it gives extra support, you know, or resistance. Order book. Yeah, order book is cool. That would be tomorrow. Tomorrow is going to be altcoin stream, guys. I'm going to put it in the agenda for, I think, 2:30 p.m. Central European time. Oh, my phone is dead. Battery's gone. My power bank is not in my office, so I'll get it. But yo, everyone, it is time for me to do something else. I will put the like having dinner and go to bed. I will put the timestamp of the analysis in the video. If you came here late, go to minute 14, and you will be probably entering the analysis like somewhere. It wasn't too long, so make sure to check it out. Yeah. Tomorrow is going to be altcoin stream, tomorrow afternoon. So I will make sure to share a straw poll link in Discord, and I'll make sure to put it in the YouTube community section as well on my channel. So you probably see it when you scroll through YouTube if you are sub, so that you can vote for the alts. And then we're going to try to do as many charts as we can. So it should be fun. I always like it to hop charts, hop. So yo, hope you have a good day. Or a good night wherever you live in the world, of course. And tomorrow we're back. Tomorrow is Sunday. Make sure to touch grass, spend some time with family and friends as well. And yeah, I'm gonna see you tomorrow.